They gave India 21 days to choose a side, and now the deadline is ticking like a financial time bomb. President Trump just announced a brutal 50% tariff on Indian imports, starting with a 25% hit this week and doubling 3 weeks later. The reason? India's growing alliance with Russia disguised as oil trade. But this isn't just about tariffs. This is about power, alignment, and a forced split in the global order. And what you're about to see isn't just a trade war, it's a line in the sand. India has been buying more than 40% of its oil from Russia, some of it resold at a profit to other countries, including U.S. allies. From a Western perspective, that's funding the very machine they claim to oppose. But India calls it energy security, a sovereign right. And they're not backing down. So Trump pulled the trigger. The move shocked markets. Not just because of the size, a 50% tariff is rarely seen between major partners, but because of the message, neutrality is over. Pick your side. Now here's what they're not telling you. This ultimatum is bigger than India. It's a test case, a geopolitical filter. Because for years, the U.S. relied on soft diplomacy to sway nations away from Russian influence. Now the gloves are off, and economics are the new weapon. And the consequences? Far from symbolic. India isn't just a trading partner. It's the 5th largest economy in the world, a manufacturing hub, and one of the key players in the emerging BRICS coalition. Damaging that relationship doesn't just pressure India, it risks speeding up the very multipolar shift the U.S. fears most. This isn't speculation. It's already happening. Since the announcement, India has doubled down on domestic energy deals. Talks with Russia and Iran are intensifying. There's even discussion of settling future oil trades outside the dollar, a quiet nod to de-dollarization. And that's where things get dangerous. Because if this ultimatum backfires, if India leans harder into non-Western systems, the U.S. could find itself accelerating the decline of its own influence. The very tool used to punish could become the blade that cuts global dominance short. This is the real reset, and it's happening faster than most realize. The global financial system was built on compliance, trade flows, swift access, dollar reserves, all designed to keep nations in orbit around Washington. But the moment those nations find alternative systems, the center collapses. That's why this story matters. It's not about a tariff. It's about the unraveling of unipolar control and the rise of fractured resource-backed alliances that don't ask for permission. And the most important question isn't what Trump just did. It's what India will do next, because they have options. Option 1, back down, cut ties with Russia, pivot toward Western terms, and preserve market access. But that means sacrificing sovereign energy strategy and looking weak in front of BRICS allies. Option 2, hold the line. Absorb the tariffs, strengthen Eastern ties, and signal a long-term shift toward alternative trade blocs. Risky? Yes, but also historic. And here's the wild card no one is pricing in. If India weathers the storm and others follow, this becomes a blueprint. Tariffs won't be a deterrent. They'll be a catalyst. That's why this isn't just a test for India. It's a test for the entire framework of U.S.-led economic enforcement. The kind of test that doesn't end with a press conference. It ends with a realignment of global loyalty, and the window to act is closing. Behind the scenes, U.S. officials are scrambling, trying to negotiate, contain, and spin. But India's public posture hasn't wavered. They've called the decision unfair. They've defended their right to buy oil from whomever they choose, and they're treating this as economic coercion, not diplomacy, which raises the real threat, retaliation. If India hits back, even selectively, this escalates from a policy decision to a tit-for-tat trade war. And the ripple effects would be global. Supply chains would fracture. Manufacturing would slow. BRICS solidarity would surge. And the dollar? It would face another wave of quiet abandonment. Because make no mistake, the dollar isn't just a currency. It's a compliance mechanism. And the more nations resist it, the more fragile it becomes. That's why this tariff matters. It's not about India's oil. It's about the crumbling ability of the U.S. to dictate terms. A 50% tariff used to send shockwaves. Today, it sparks alternatives. And when enough countries realize they can survive without bowing to Western terms, the whole system resets. So here's the truth. No one is saying, this isn't about punishing India. It's about the U.S. trying to hold a world that's already slipping away. And the most important deadline isn't the 3-week tariff escalation. It's a silent clock counting down on unipolar dominance. Let's take this deeper. India's energy alliance with Russia didn't happen in a vacuum. It's the result of a global system that's been unraveling for years, one where trust in U.S. financial leadership is no longer guaranteed and economic decisions are driven by survival, not loyalty. Think about what India gains by resisting the tariff pressure. They preserve access to heavily discounted Russian crude, which stabilizes their domestic inflation and supports long-term growth. They deepen ties with non-Western partners, reducing dependence on volatile U.S. policy shifts. And most importantly, they signal to other BRICS and Global South nations that defiance is now possible. Because this isn't just about India, that defiance is now possible. Because this isn't just about India, it's about precedent. That's why this matters. The 50% tariff may look aggressive, but it also looks desperate. It reveals that the traditional tools of influence are weakening, and that brute force is replacing negotiation. That shift doesn't inspire compliance, it triggers resistance. Already, you can see the ripple effects forming. Quiet meetings between BRICS central banks, experimental trade settlements in local currencies, strategic reserve diversification, not into dollars but into commodities, and more conversations about gold-backed mechanisms for trade reconciliation. These aren't symbolic meetings, they're infrastructure drills. It means swift alternatives, commodity-backed exchanges, and frameworks for digital settlement are already being stress-tested behind closed doors. That's the part most analysts are missing. This isn't just about oil. It's about what replaces a dollar when trust erodes, and who writes the new rules. India isn't going to flip overnight, but by standing firm, they buy time. Time to forge parallel infrastructure, time to secure logistics, time to prepare for a world where the U.S. is no longer the global referee. And if they succeed, others will follow. Brazil, South Africa, Indonesia, Saudi Arabia, all watching closely. All wondering if now is the moment to pivot eastward, not out of ideology, but out of necessity. Because in a world where energy, food, and manufacturing are the new currencies of power, alignment becomes a survival strategy. This is what makes Trump's ultimatum so explosive. It's not that it came out of nowhere, it's that it came too late. The U.S. isn't dealing with the same world it once controlled. The 1990s playbook, where pressure created compliance, no longer works when your rivals have built escape hatches, when entire networks are emerging that don't require dollar clearance or swift messaging. And that's the risk, not that India fights back, but that it stops needing to. That's the true rebalancing. Not conflict, but irrelevance. If you're ready to stay ahead of these shifts, the kind of headlines downplaying the insider's track, subscribe to Wealth Signal. We don't just cover finance, we decode the moves that reshape it.